Hey everyone, my name is David Rose. Well, the JobKeeper Payment information keeps coming through fast and thick, but I thought I'd take the opportunity today to just provide you a bit of an understanding of really how it works. Obviously, still some unanswered questions, and they'll those answers will come through over the next few weeks. But we've been getting a lot of queries from clients around some of the fundamentals. So I thought I'd run through that with you today. So there's our normal disclaimer. That's who I am. If you need to get in contact with me, mobile's typically the best number, or any of our awesome team here at Vincents. So the JobKeeper payment, what is it? It's $1,500 a fortnight before tax. The important information there is before tax for people who are eligible employees. That all our eligible businesses and not-for-profit organisations that have been impacted by COVID-19 will receive monthly in arrears. And yes, that's after they pay staff. We've been fielding a lot of questions from people saying, do we have to pay it in order to get it? And the answer is simply yes. And that's really to enable, employers to retain their staff. There's two aspects of the law. You don't really care about it, but there's coronavirus response package bill and the rules, and specifically a lot of the information that's coming through that you see on the ATO website is out of those two pieces of legislation that have now been passed. So the fundamental question is my business eligible? So you qualify for the scheme for a particular fortnight, which is known as a JobKeeper fortnight. If at the 1st of March you carried on a business or you were a not-for-profit, and at the end of a JobKeeper fortnight you met the decline in turnover test in one of two ways. So the first way is obviously the basic test, and a lot of our clients will sit in this middle category here. But charities are not-for-profit organisations. If your estimated turnover has fallen, likely to fall 15% or greater, we'll talk about that likely to fall component a little bit later. And for businesses, whereas most of our clients sit in this area, 30% or greater. And if you're fortunate enough to have the $1 billion, 50% or greater. So that's the basic test. And then there's an alternate test which applies to organizations like startup businesses that were in existence prior to 30 March, or if you're a business that acquired another business and you don't have a previous year comparison. And obviously with the alternate test, the commissioner has the discretion, to legislate changes there. This alternate test has raised a whole lot of questions around people, and I think it's going to be one of those things where we need to go back through the tax office and really clarify. But let's just say you're a business who you're on a significant upward trend. We've got clients whose sales were up 50, 100% on last year, and their sales have now fallen off the edge of a cliff. Typically under the basic test, they aren't eligible. And under the alternate test is something that we're going to have to run a case for. And we've also got situations where, clients who raise regular invoices for the same amounts that aren't really service related and registered for GST on an accruals basis, but they're not getting any of their invoices paid. It's like 100% of their invoices are not being paid. So it's that whole accruals component, and their cash collections obviously suffering a fall of greater than 30%. Also it doesn't apply to entities or sole traders that don't hold an APN. So under that alternate test, you're going to require businesses to provide appropriate evidence that it satisfies that test. There's a lot of those things that something called the turnover test period. We're working with clients at the moment to build those arguments so that we can go back on specific situations that fall out of that basic test area. Obviously, the best way to satisfy it and become eligible is if you satisfy that basic test, but there are a lot of businesses who will fall into this alternate test area. So the decline in turnover test, you need to meet the test before you're eligible. Once you meet the test, this is interesting. Once you meet the test, you don't need to retest later. The basic test will be based on your business activity statements previously lodged by reference to the same month or same quarter last year, and that depends on how you were registered. But even if you are registered on a quarterly basis, you can look at a single month in order to qualify as well. And you apply for the payment in the month that you reasonably expect that turnover will fall. Just a note for everyone, and this is the scare the whatsies out of you, but some hefty fines where entity engages in fraud, including jail of up to 75% financial penalty. There's some very stringent rules around the process that you need to follow in order to be an eligible employer. And one of those fundamental components obviously is that you need to actually, as I raised before, you need to pay before you receive, and it's monthly in arrears. There's all sorts of things around where people may be tempted to shift turnovers and those sorts of things into a particular month just in order to qualify. So just need to be aware of those there. I mean, obviously the whole idea of the stimulus package is to push money back into the economy and to give people some money while they do it. It's not really like as a business you're benefiting, but at the same time you just need to be aware of that penalty regime. How do you get it? Well, it's pretty simple. A lot of people probably have already done this step, but there's a register your interest, and that's the link to register your interest. A lot of the information that's come out now has the rest of the process more documented, but you need to check that you and your employees meet the eligibility requirements. So whilst you're waiting to receive the payment, start doing the work around the turnover test and how you'll meet that criteria. Look through your all your employees to find out who's going to be eligible or not, just to get all of those ducks in a row. You need to continue to pay at least $1,500 to each eligible employee per JobKeeper fortnight. The first JobKeeper fortnight is the period from 30 March to 12 April. There has been, as late of yesterday, something comes out says that if you didn't make that first payment in that fortnight, you can back pay in the second JobKeeper fortnight from the 13th of April to the 27th of April and receive payment for the full month. That is a once off. You can't go and do that in any subsequent JobKeeper fortnights. Step 4 is to notify your eligible employees that you're intending to claim the JobKeeper payment on their behalf, and check they aren't claiming JobKeeper payment through any other employer or have nominated through another business when which they have an ABN. We've got letter templates that are set up in the Vincents COVID Hub. So click on those and feel free to grab them. You need to send the JobKeeper employee nomination notice to your nominated employees. So this form came out yesterday, and complete and return it to you at the end of April. It's a pretty simple form, not very difficult to complete at all. And again, we've got a copy of that form sitting in the COVID Hub. Obviously, it's got to be to you by the end of April if you plan to claim that JobKeeper payment for April. Keep it on file and provide a copy to your registered tax agent if you're using one. Step 6, and obviously the tax office is running around trying to get all the IT systems and all of that in place. But step 6 is from the 20th of April, you can enroll with the ATO for the JobKeeper payment using your business portal and authenticate with using your MyGov ID. Again, you got to do this by the end of April, so you've only got a short period of time to claim the JobKeeper payments for April. Step 7, in the online form, you'd be asked to provide your bank account details and indicate if you're claiming an entitlement based on business participation. For example, if you're a sole trader. Step 8 then is to specify the estimated number of employees who will be eligible for the first JobKeeper fortnight. 30 March to 12 April, and the second JobKeeper fortnight from the 13th to the 26th of April. There's a process in place after the 4th of May, and this is obviously the tax office again working more on their IT infrastructure to enable accounting software providers to use the single touch payroll information to flow through. So after the 4th of May, you can apply to claim JobKeeper payment by logging into your business portal. That's the external link. Again, ensure you've paid the eligible employees the minimum of the $1,500 before tax. Step 3, identify your eligible employees in the application form by selecting employee details that are already pre-filled from your STP pay reports. And if you report your information payroll through STP-enabled payroll solutions, so that's software like Xero and MYB and the like, manually entering employee details in the ATO online services or the business portal if you're not an STP-enabled, if you don't have an STP-enabled payroll solution, or if you fall into that other category that we'll talk about where you may be entitled to the JobKeeper payment, or use us as a registered tax agent who can submit the form on your behalf and through the online services that we have available to us. Step 4, submit the confirmation of your eligible employees online and wait for your confirmation email or SMS showing that it's been received. So obviously you can see where the technology is coming into play there now. Notify your eligible employees that you've nominated them. So that's the example letter that I referred to before that's on our Vincents website in the COVID Hub section. The government will pay you the JobKeeper payment for all eligible employees after receiving your application, and again that's monthly in arrears. So each month, so that you are required each month, you'll need to reconfirm that your reported eligible employees haven't changed through the ATO online services or your business portal, or via your registered tax agent. This will ensure that you continue to receive the JobKeeper payments from the government for each month in respect of those JobKeeper fortnights. You don't need to retest your reported fall in turnover, but you do need to provide information as to your current and projected turnover. So this will be done in your monthly JobKeeper declaration report. So there's a document that exists now that will be the JobKeeper declaration report, and that'll require information on what your current turnover for the month is and what your projected are. So it doesn't matter that you're whether you're registered for GST on a monthly or a quarterly basis in order to go in and get this payment for a particular month, but this is where you're going to have to start providing information back to the ATO. And step 8 is if your eligible employees change or leave your employment, you'll need to notify the government through that monthly JobKeeper declaration report. As I said, as tax agents, complete all these steps on your behalf if you'd like. And if you aren't registered or fit into the SDP or other category, there'll still be this this claim process that you need to go through on those forms. Relevant dates. So obviously the 1st of March is the date on which a person must be an eligible employee of an employer or and currently employed. Includes those stood down or rehired. So there is facility there if you terminated people's employment and you gave them separation certificates that you can rehire. The 30th of March is the JobKeeper subsidy. It applies to payments after this date. So it doesn't apply to payments before the date, and it doesn't apply to payments where you may have prepaid people or given people a couple of weeks pay or given them some pay prior to 30 March, unfortunately. The 30 March to 12 April is obviously the first 14-day fortnight period, the JobKeeper fortnight, which qualifies for the subsidy, and the payments need to have been made to all employees by the 27th of April. There's 13 JobKeeper fortnights that the JobKeeper payment applies to. First to the 8th of May is the week that payments are expected to be made by the ATO to employers. And then we have our last JobKeeper fortnight period, which is the 14th of September to the 27th of September 2020. And the 27th of September being the day that the date of the JobKeeper subsidy finishes. So what other individuals are eligible? So where you're an entity carrying on a business with an ABN, you can have one partner from the partnership. So an individual who's one partner from the partnership. That's not necessarily the trust that's a partner in the partnership. There's a distinction there. Obviously, the JobKeeper payment is really for individuals. One beneficiary of a trust where the beneficiary receives distributions instead of being paid salary or wages. So you might be running a consulting business and distributing to the profits, to yourself, as opposed to making a salary payment. So, an individual beneficiary can nominate one nominated company director of an eligible business. Some interesting things about companies and whether all companies for the JobKeeper payment are actually deemed to be carrying on a business or not, but some of that hasn't been clarified, or one shareholder of an eligible business excuse me, that pays shareholders that provide labor. So who does it not apply to? Doesn't apply to employees in receipt of work cover who isn't working. Someone who's in receipt of a government allowance. So that's things like the parental leave allowance and everything like that. We're not meant to double up on that. At this stage, it really doesn't appear to apply to people like carers or nannies or those sorts of people who don't hold ABN numbers. Not that this applies to a lot of our clients, but a business subject to the major bank levy. And we've had this question a little bit. It doesn't apply to any companies that are in liquidation or partnership, or trust or sole trader that's in bankruptcy. But it's our understanding that it can apply to businesses that are currently in administration. So how do you work out which employees are eligible? Well, there's the criteria simply there. Eligible employee is an employee who's currently employed by the eligible employer. So that includes people that have been stood down, or people that are rehired or that were made redundant. They're a full-time or a part-time employee, or a casual employed on a regular systematic basis for longer than 12 months. So your casuals that have been working regularly for longer than 12 months as at the 1st of March. Or earlier if that casual worked for a business that you purchased and in total has worked 12 months. So for those people that acquired businesses throughout the year and they had casual employees that worked for a previous employer, they can be eligible employees for the JobKeeper payment. They're an Australian citizen, the holder of a permanent visa or a special category. So that special category is only 444 visa holders as at 1 March. So it does not apply. This is important because we've got quite a number of hospitality clients in here. It doesn't apply to the temporary skills 482, which is the old 457 visa holders. Obviously that they're a resident for Australian tax purposes on the 1st of March 2020 and isn't in receipt of a JobKeeper payment from another employer. So, that step that I referred to before, where they're required to nominate, that JobKeeper nomination form. You need to advise the employees that you've nominated them as eligible, and they need to accept. So that's, again, that's the letter that we provided. Some other helpful information for you, just to understand. Unlike the cash boost for employers, the JobKeeper subsidy will not be subject to the ATO offsetting against any other ATO debts. We've had that question a bit. It's likely, this hasn't been legislated yet other than in South Australia, but it's likely that this will happen in other states, is that it won't be treated for wages for calculating either payroll tax or your equivalent of work cover. You need to make sure that you don't that you treat it correctly for your BAS disclosure. This is where your eligibility will be monitored. So it's not subject to GST. It's not a GST free supplier either. Otherwise, it's going to show up on your business activity statement. And you don't want that to happen. We've got some recorded videos that are sitting in our hub on really how to process, this in accounting applications, including Xero and MYOB. So go and click on there to find out. We walk you through, tell you what codes to set up in MYB and actually a payroll process for you with the categories. Anyone who's people that they have apprentices, the JobKeeper subsidy will trump the apprentice and trainee wage subsidy that's previously announced. One of the things just to bear in mind, and this is in relation to employees who don't provide their employer with the right information, is that it's a joint and several liability for the overpayment where the employee gives you the wrong information. So joint and several liability, it's obviously a legal term. In the first instance, they'll chase the employee, but if they cannot get it out of the employee, then you as employer, will be responsible. So please do make sure that you have that agreement and that paperwork, just to support things in that regard. The payments, to employees will be subject to tax, PAYG withholding. So your eligible employees must be paid. They must be paid, physically paid, not just a payroll that's processed and no payment made, but physically paid a minimum of $1,500 net of tax. So if you use the fortnightly tax scales, that's $1,308 after tax. The wages remain subject to the superannuation guarantee, but a top-up's not required on the employees who normally receive less than $1,500 gross, or those employees receiving the payments who are currently stood down. I'll take you through an example of what that looks like in a sec. There's no backdating of the payment where you only qualify in a later period. There are 13 fortnights the payment applies to, and the only backdating, as I said before, that you can make is in that second JobKeeper fortnight, which is the 13th of April to the 27th of April for that first fortnight, 30 March to 12 April. So here's the three scenarios, that you're going to come across in terms of this JobKeeper payment. So scenario one, your employee ordinarily receives, greater than $1,500 a fortnight. So in this example, we just use $2,500 a fortnight. Take the tax out that you normally take the tax out. You pay superannuation on the full amount. The second scenario is the employee still working. And let's just say they might receive something less than $1,500 a fortnight. We're using $1,000 as an example here, before super. So, they get the $1,500, the tax is $192, so it's net $1,308, and you only have to pay super on the amount, on the difference. That's why I sort of walk you through in the Xero and MYB videos, because it's set up in a way, one is not to calculate the superannuation amount, but two, also to separate it so that if you're doing your work cover, your work cover calculations, or if you're unfortunate enough to pay payroll tax, your payroll tax calcs. And then you've got the the third scenario where your employee is stood down. And that's just a straightforward, it's $1,500, $192 tax. They get $1,308, and there's no superannuation guarantee amount. I mean, interestingly, when you look at the job seeker amount, that's $550 a week, and in Queensland they're subject to they can get potentially a rental assistance of $2,000 that's paid direct to the employer. So when you look at the difference between JobKeeper and job seeker, it's only like $60, $60 a week potentially. But, I guess what we're saying to our employers is, look at what your, look at your reputation, look at what your retention strategy is, with staff. This will be long lived in people's memories in terms of how they've been treated, through this whole process. So if you need more information, jump onto the website, and treasury.com.au, the JobKeeper thing there as well. One of the things that I just wanted to spend a quick bit of time on before I do finish is this concept of we're hearing from a number of our clients about whether you can select who gets it and who doesn't, and whether you can leave people stood down, and only apply for JobKeeper for those people that are working. The simple answer to that question at this stage is no, you cannot. There is a concept of one in, all in. So if you are an employee and you meet the criteria of being an eligible employee, you can't be selective about who you bring into the JobKeeper payment part of it. There's also, I guess, some basis for, getting people, to do some form of work. I know that, clients, for example, in hospitality businesses who have completely shut down, and they were waiters or waitresses in those businesses, it's very difficult to, to have them come and do work. But I guess, we're seeing a bit of this where some people are given some work to do where, they're allocating hours, across what might be one full job in order to, to spread the love and give some of that work. Obviously, just a, an unashamed plug for, for the rest of our services. Incredible team of people who work extremely hard in all of these different areas, that are here to support you. We've been working our tails off in terms of making sure that we provide, information, up-to-date information, to our clients as we all go through this. As I say, we are all in this together. If you do have any queries, from if you're already an existing Vincents client, obviously feel free to reach out to your Rockstar team, to give you the support. For those of you who aren't clients, please feel free to call us. We've got a COVID-19 hotline. We've got a team of specialists that are there supporting people as well, including some of the larger membership type groups that are really struggling to come to grips with the plethora of information that's coming through. Again, my name's David Rose. I have the privilege of being the managing director of this practice. I've got a very large retail and hospitality client base that I've been working with over the period of the last month. Also, in order to get them to the other side of this. Appreciate you checking in on this webinar. Thank you.